Krishna has been investing in mutual funds for a long time now, but he is disappointed. He is looking for such a scheme where he can invest in gold, equities, debt instruments, bonds and international shares all at the same time. But if he has to do all this by himself, then he will have to invest in different mutual funds to take advantage of each of these asset classes. This will eat a lot of his time and at times can become very difficult for him. Krishna's friend Raman has a piece of advice for him. Raman advises Krishna to invest in a fund of funds. Now, what is this fund of funds? Fund of funds is a mutual fund scheme which, instead of directly investing in different asset classes, invests in other mutual funds which have exposures to these various asset classes. Fund of funds is of two types. The first type of fund of funds invests only in domestic mutual funds, while the other types of fund of funds are those funds that invest in such mutual funds which buy shares of companies that are listed on the stock market of foreign countries. Alternative Investments Quantum Mutual Fund Senior Fund Manager Chirag Mehta says that fund of funds are of various types, like actively managed equity fund of funds or multi-asset fund of funds, which invests in numerous other mutual fund schemes. This way, fund of funds solves the problems of investors and help them increase the value of their investments. According to experts, fund of funds is ideal for those investors who don't want to get into the mess of managing their own portfolio. MyWealthGrowth.com co-founder Harshad Chetanwala says investors who don't want to fall into the mess of managing their own portfolio can invest in fund of funds. Money9 suggests fund of funds is for those retail investors who want to minimize their risk by having a diversified portfolio. How does fund of funds work? What are the positives and negatives? Know all these in Formula Guru.